afternoon, everyone around the world. My name is Eric. Today is the 12th of December, and welcome to another Elliott Wave forecast video day. In today's video, we're going to explain how the EURAUD, the EURCAD can be telling what the market is, how the market is going to react this week. This week is a very, very interesting week. Everybody knows that the open market committed is going to reveal if they're going to increase rate or no here in the U.S. In Elliott Wave forecast, we don't pay that much attention to those news, but I know that many traders are in need of that answer, and they are getting anxious to know how the market react. Everybody is no secret that for the last year and a half, or at least in some instruments sent early in the year, the market's been trending in favor of the dollar, in favor of the indices, and in favor of the yen pairs and the lows that we saw in the market on June 24. Now, seems like the sequence and let's talk a little bit about the sequence. In Elliott Wave forecast, we don't trade based in fundamental or anything like that. We must trade based in sequence, cycles, using Fibonacci levels, and also using Elliott Wave as a tool to communicate what we mean and what we see in the market. The market, like everything in life, has a nature. It has a natural wave of moving. And many books have been reading about indicators, news, fundamentals, and the reality is that there is a lack of knowledge about the natural wave that the market moves. Elliott Wave was the first one, the Elliott Wave theory is the first one to express some ideas about the market move, but we have taken it to another level in the way that we don't only count or look for the 1, 2, 3, 4, 5 ABC, but we look for an equal opportunity of movement between the impulse sequence and the corrective sequence. Talking about which, this is the EURAUD. The last significant peak in the EURAUD is on September 14. This is the September 14 lows or peak in the EURAUD. Since that date, the EURAUD has done 1, 2, 3, 4, and 5. And I want to be clear, these are no 5 weeks in Elliott Wave. This is a sequence that it comes with what we call 5 swings. The difference between swings and wave is that 5 weeks needs to follow the basic rules of Elliott Wave. Wave 2 cannot be below wave 1. Wave 4 cannot overlap with the top of the wave 1. And wave 3 cannot be the shortest. This has nothing to do with it. This is market natural wave of moving of a sequence that the market is moving right there. Now, those 5 swings from that specific date in the EURAUD can be telling me that that sequence is incomplete, and that as far as that this election night, November the 9th peak remains in place, the EURAUD should trade lower and go to 139 area. Now, that's the EURAUD. Let's take a look now at the EURCAD from the same November 9 election night. 1, 2, 3, 4, and 5. So the EURCAD is telling me from that day that also has an incomplete sequence to the downside, and that the EURCAD, after everything said and done from that cycle of November the 9th, the EURCAD should reach over here some levels very low. I would say around 131 area over here. So I got 2 5s in a corrective matter. And it's very telling to say I got to fight in a corrective matter. Why? Because they are corrective. That means that because they are corrective, they should extend into a 7 swing. We got 5. Now, let's see in this Euro Aussie chart right here. This is August the 24th, 2015. This is February 11 of 2015, 16, and we got 1, 2, 3, 4, 5, 6, 7. The Euro Aussie is ending that daily cycle from August of 2015. But even though the whole sequence already have the number of swing in place, when I look at the pair below, which is the EURAUD started on the wave 4 or the swing 4 in the Euro Aussie, and the EURAUD has 1, 2, and 3. So when I look at these two, I'm able to see right there that the 4-hour sequence in both of them is bearish against the November 9 of 2016, and both of them they showing 5 swing. And then I have to assume that over here we should see continuation lower in both of them one more time before a pullback. Now, if I look here at the dollar, this is the dollar against the Euro Aussie. This is the dollar against the EURAUD. So if I look at the dollar, it's an inverse correlation to the Euro Aussie. I would say that it is over here almost perfect. Euro Aussie lower, dollar higher. Euro Aussie higher, dollar lower. In the cycle over here. So I have to say, as a trader, I don't mind what the Fed said on Wednesday. As a trader, I need to look at the market as a trader, not as a news report. Because if you follow what the Fed say on Wednesday, you're gonna find out after the fact. And traders cannot trade based in after the fact. So as a trader, I have to say, even though the dollar sequence is extreme, even though the Euro Aussie sequence in the daily from 824 is kind of got the number of swing in place because already got 1, 2, 3, 4, 5, 6, 7. I have to say that zooming in into the shorter cycles, I have to say that as far as the Euro Aussie remains below this level or this pivot remains in place, the Euro Aussie should reach this low over here. And as far as the EURAUD remains below here, the EURAUD also should trade lower. And those two events is gonna drag for one more time the dollar into the upside as far as November the 9th lows in the dollar remains in place. If you guys look at it, it is the same invalidation level. This is November the 9th in the dollar. This is November the 9th in the Euro Aussie. It is the same trade as showing in this chart. So we in Elliott Wave forecast, we look at the market as a traders, and we are able to say to our members, as far as November the 9th peak remains in place, we do like selling the Euro Aussie. We do like selling the EURAUD. That's how we look at the market. And we have an idea that say that as far as November the 9th is in place, the dollar, if we follow the same sequence that don't see any reason why, should see the final push within this big time or almost a year sequence before it ends. I want you guys all to understand and see how we look at the market in Elliott Wave forecast. In this simple video we did correlations, sequence, cycles, in order and extensions and retracement using the FIBO levels in order to forecast the market. We not always looking for 1, 2, 3, 4, 5. We don't pay attention to the facts. We know that the event is there. I know that it's going to create a lot of up and downs. But at the end of the day, we look at the market as a trader to anticipate a move instead of the trader that is reacting at 2 p.m. on Wednesday what the facts say in a statement. Learn from this, get better, and if you like the video, we offer a free trial, which is a 14-day trials when you guys can see 52 instruments across the board, and the conclusion is there, that we trade as a traders. We don't trade as following a news. We anticipate the result. We told this our members every single day what we like about the market based on technicals, knowing fundamentals. And like I say, we are trying to do Elliott Wave better. In Elliott Wave, I got the same forecast here if I put labels or I do not put labels. That's the message that you guys want to get. So the message, as far as November the 9th in place, the dollar should continue into the same dynamic about the market, should continue for at least one more push, even though it is an extreme sequence across the board. And that's all for today. Have a good day, everybody.